what we've done is we've basically created an investor map. And probably over the last year and a half, we've been slowly kind of updating the map with different videos and different information based on what's happening in the city. So the fantastic part about this map is if you click on a specific area of the city, so here I clicked the Henday South. So when you click on the map, what's going to pop up is a YouTube video here. Again, this is probably about 5 or 7 years old from the video. Most of the stuff is going to be relatively, up to date, or it's going to be useful. But there's obviously going to be some small changes to that as well. But what it's going to give you as well, beyond just the YouTube video, is a description of the area. Gives you kind of what's happening, some key drivers, investment opportunities in the area, things to expect, price points, and all that good stuff. So what the City of Edmonton is trying to do, we've heard this talk about a lot in the news, but basically making a 15-minute city. So if you take a radius around, can you get to schools, restaurants, grocery stores, all that stuff in at 15-minute commute time. That's kind of what we're seeing in these general areas. All right, so these are generally all active properties. So when we talk about our older condos, so this is an older condo. This one is in the Duggan community. So this is actually a 2-bed, 1-bath, 753 square feet. Asking price is $84,900. So this is kind of your standard walk-up apartment building. Condo fees on this one's about $600, $650. So something like this, fairly easy investment, decent tenant profile, something to just kind of kickstart your investment. Short to medium term rental, again, what I was focusing on here is what Carlos has talked about before in the past, is really focusing on something with square feet and bedroom size. So usually minimum of 5 bedroom. You can go with a little bit of a bigger house, but this one purchase price is $525, and this is in the Steinhauer community. All right. So older multifamily, like I mentioned, so this is a 21-unit building, also in the Duggan area, and this one is institutionally owned. So this one is owned by Harpar Investments. They own a ton of investment properties across Western Canada. Generally, these guys don't sell too much of their investments, but you could find one of those one-off, investors who's owned it for basically 30 years, no mortgage, find a creative deal. Generally, on those ones, you're going to be door knocking, pulling title, seeing if you can find a good opportunity. Okay, this is where I think the magic is in this South Central area.
You can see how basically things were very quiet last year compared to this year, and then this is basically the first 6-8 months that we had in 2024. This is single-family homes. The average price in Edmonton is basically $460,000. In the greater Edmonton area, which pulls in communities like St. Albert and Sherwood Park and Beaumont, which are traditionally more expensive than the city of Edmonton. That's what pulls up the greater Edmonton area. It's basically just shy of $474,000. That's over a 9% increase year over year. And then I like to look back 2 years. This is, again, going back to the composite, which is basically every type of property, as I mentioned before. And you can see the little roller coaster ride we had here, and then the big jump that we had. Things have basically remained flat. This last year was, this year you can see things basically dropped off. It looks like they're dropping off a little bit, but I'm expecting things to have leveled off in November, as I mentioned about things being so busy right now. This is the most recent information that we can get. We do have weekly stats that come out, but this goes back to November 12th. And you can see that unit sales are down a little bit over that week of the 6th to the 12th. New listings are also down. You can see the average price. Also available on the Ray is rental stats. This is still a relatively new piece of information. These numbers here are definitely growing, but you can get a good idea in regards to what average 1-bedroom and 2-bedroom units are that are for rent based on the Realtors Association. And as you can see here, annual rental increases in Alberta and Manitoba are moderate at 6% and 5.6%. So Alberta and Saskatchewan continue to be, and part of that reason is we're a lot more affordable than these other provinces. We have a lot of people moving here, not only in migration, but still some immigration. Falling rents, this is basically city focused. Falling rents, Vancouver, Toronto, Calgary, Montreal. Edmonton continues to lead the rental growth for major market. We talked about that on a couple of slides ago. And then you can see Calgary down 5.5 and Vancouver 5% there. This is an interesting slide here in regards to year-over-year rental changes. You can see Edmonton leading the charge here, Montreal, Calgary down, Ottawa flat, Toronto and Vancouver down. The top 5, if any of you are interested in investing in mid-markets in Alberta, this is an interesting slide, and it's consistent from the last couple of months. Lloydminster, out of mid-market growth, the top 15 cities, Lloydminster has the #1 growth year over year at 24%. Average price did increase almost 14%. The average price in Calgary is $620,000. Detached homes are up almost 11%. The average single-family detached home, if you recall, it was $500,000 in Edmonton. It's $800,000 in Calgary. Inventory is currently at 2.3 months, and prices have increased 41% in Calgary over the past 4 years. Also, housing starts in Alberta are on a roll. So new housing starts are at, they're also beating record production. The 2 biggest areas of growth are Calgary at 47% of the new builds are starting in Calgary, 35% in Edmonton. No surprise there that basically those 2 cities are just humming along. I've certainly helped a few people buy some new builds this year. It's actually been very frustrating for them because I think some of these builders have been caught off guard by how busy they've been. They're trying to ramp up all of their production abilities and stuff like that. And certainly with 2 of my buyers, they are seeing about a 5-month delay on what they were initially told for the house being built.
So why dollars go further in Edmonton? Some of you guys know this, some of you guys are here largely because of that. What can you do with $250,000 in Toronto? Very little. $500 in Vancouver, almost nothing. You can leverage through CMHC, but at the same time, we talk to investors weekly who call us and they have projects and they're from the Lower Mainland or from Toronto and everything else. And their barrier to entry is in the tens of millions of dollars. In the Edmonton market, it's a fraction of that. So for real estate investors, this is a market that makes sense, and there is capital that backs projects. 1,000 new people in Edmonton area in the past 2 years. Last year, Edmonton added 47,000 newcomers, so newcomers immigrating into Canada, and a little under 20,000 interprovincial migration. So this is, this is a couple years old at this point, but a trend that is continuing to see that growth. And what Stats Canada, what the feds are saying is going to continue. And there's a number of reasons why that we'll get into. But what they're predicting is an additional 135,000 people over the next 3 years. If you see growth in terms of 2% as kind of an average, established city, so this is rapid growth. And we have, obviously infrastructural strain, concerns, need some money. We were talking about schools earlier, a new hospital on the south side. So there is some balance that we need to offset this rapid growth we're going through and need some federal and provincial dollars as well. So unlocking some of these opportunities. So number one rule in real estate, location, location, location. That matters for a lot of reasons. Where you're going to rent, what kind of rents you're going to achieve, where it's desirable. There's certain areas that I'm not going to do this because I know ultimately at the end of the day for my clients or for myself even, I can't make those rent numbers work. 2, lot size matters. When you're looking at unlocking opportunity for redevelopment of sites, the larger your lot, the more opportunities you're going to have. Now, if you come to me with a lot in the middle of a neighborhood, somewhere else that doesn't meet some of this other criteria, and it's a huge lot, it's going to be a bit more difficult because you're maxed at 8 units, like I said, under the RS zone. But there is opportunity depending on some of these other criteria too. So, nodes and corridors. You're going to find this map both in any of the district plans that you search or in the city's plan. It's going to show you some of these key areas where the city says, yes, real estate within a block or 2 of these nodes, or in terms of secondary, primary corridors, they're saying 5 blocks away. There is, support for additional density, and seeing that through rezoning. And yeah, like I said, here was the example showing this is on that plan there. So this is what your secondary corridor, and showing kind of areas where there's support for additional height and density. And then primary corridor, you can see how that swath is that much wider, a number of blocks on either side, saying, hey, we support density and growth in, in this area as well. And then kind of a district node. This is Bonnie Doon Mall. You've got your LRT station, everything else, saying, hey, this is a great target area for some of that additional height density as well. So leveraging some of this policy decisions that have been made to make strategic decisions about, where investment makes sense, where you can leverage that, where you can flip that even for opportunity. A bit of a rhetorical question, but how has the Edmonton real estate landscape changed in the past decade? And as someone who was born in Edmonton, grew up here, moved away for a bit, came back, we have seen a big transformation. I remember when I was, coming out of university initially, early 2000s, mid 2000s, and kind of this real estate boom in 05, 06, 07. Things kind of went crazy. There was a lot of product, you're talking to some realtors here, a lot of product built at that time. They'll tell you maybe don't buy because they were built to a standard that wasn't great and built very rapidly. But we're going to explore this a little bit. And what is driving that change? So we talked a bit about some of this earlier, and I'm going to hammer through a couple of these things. Population growth, investment, and policy.